Silver just jumped 40% in months. Financial news called it a squeeze. Reddit called it a revolution. Your uncle called it a bubble. But nobody's talking about the real reason it's rising. And it's not what you think. This isn't about memes or manipulation or some grand conspiracy. It's simpler than that. And way more terrifying. Because the thing driving silver up isn't hype. It's physics. It's demand that can't be faked and supply that's running out. So let's rewind and figure out how we got here. Let's go back to 2020. Silver was boring. Like, criminally boring. It sat around $18 an ounce. Gold was the shiny one everyone talked about. Bitcoin was the cool kid. Silver? Silver was the metal your grandpa kept in a drawer and forgot about. For decades, silver had been stuck. It wasn't quite precious enough to be jewelry. It wasn't quite industrial enough to matter. It was just there. Existing. Doing silver things. Banks traded it. Investors ignored it. And the price barely moved. But while everyone was looking away, something was changing. Quietly. Slowly. And then all at once. Here's what most people miss. Silver isn't just a shiny rock you stick in a vault. It's the most conductive metal on Earth. Better than copper. Better than gold. And it doesn't corrode. Which means if you're building anything that needs to move electricity efficiently, you need silver. And guess what the world started building? Everything. Solar panels. Electric vehicles. 5G towers. AI data centers. Every single one of them runs on silver. Not a little bit. A lot. One solar panel uses about 20 grams of silver. Doesn't sound like much, right? Until you realize the world installed over 200 gigawatts of solar capacity in 2023 alone. That's billions of grams. Millions of ounces. And it's accelerating. Then came EVs. Every electric vehicle uses between 25 to 50 grams of silver in its electrical systems. Tesla alone sold over 1.8 million cars in 2023. Ford's going electric. GM's going electric. China's cranking out EVs faster than anyone can count. And every single one needs silver. But here's where it gets wild. AI. Those massive data centers running ChatGPT, Google's AI cloud computing? They're power hogs. And to handle that kind of load efficiently, they need silver-plated components. Lots of them. Microsoft is building AI server farms the size of small cities. Amazon's expanding. Every tech giant is in an arms race to build more computational power. And silver is in every server, every switch, every connector. This isn't speculation. This is happening right now. Industrial demand for silver has exploded. In 2010, industrial use consumed about 487 million ounces of silver. By 2023, over 600 million ounces. And it's climbing every year. For the first time in history, silver isn't just a store of value. It's a necessity. You can't build the future without it. Now here's the uncomfortable part. While demand is exploding, supply is choking. Silver doesn't come from silver mines. Well, not mostly. About 70% of all silver is a byproduct. It's pulled from copper mines, lead mines, zinc mines. Which means silver production is tied to the demand for other metals. And when those metals slow down, so does silver. In recent years, major mines have been closing. Why? Because it's not profitable. Mining is expensive. Permitting takes years. Environmental regulations are tighter. And when silver was sitting at $15 or $18 an ounce, companies couldn't justify the cost of digging it up. So they didn't. Production peaked in 2016 at about 900 million ounces. By 2023, it dropped to around 830 million. And the gap between what we're mining and what we're using, it's widening. In 2023 alone, the world used about 1.2 billion ounces of silver. But we only mined 830 million. Where'd the rest come from? recycling, scrap, old jewelry, melted down coins, the reserves. But here's the problem. Reserves aren't infinite, and recycling can't keep up. Solar panels don't get recycled for 25 years. EVs stay on the road for a decade or more. That silver? It's locked up. Gone. Out of circulation. We're pulling from a shrinking pile to meet growing demand. And eventually, the pile runs out. Now, if you've been paying attention to silver, you've heard the rumors. Price suppression. Market manipulation. Big banks rigging the game. And here's the thing. It's not a rumor. It happened. In 2020, JP Morgan was fined $920 million for manipulating precious metals markets, including silver. For years, traders at the bank placed fake orders to move prices, a practice called spoofing. They'd flood the market with sell orders to push prices down, then cancel them and buy at the lower price. Over and over. For nearly a decade. This wasn't some rogue trader. It was systematic, institutional, and it kept silver prices artificially low for years. Other banks got caught too. Deutsche Bank, HSBC, UBS. All paid fines. All admitted to rigging markets. The evidence was clear. Silver had been controlled. But here's what changed. The manipulation worked when demand was low and supply was high. You can suppress a price when there's enough metal to go around. But when the fundamentals flip, when demand exceeds supply, manipulation stops working. You can't fake physics. You can't suppress a shortage. And that's exactly what's happening now. The banks can't hold the price down anymore because the metal isn't there. Industrial users need it. They're not trading paper contracts. They're buying physical silver and locking it into products that won't be recycled for decades. The manipulation didn't end because regulators won. It ended because reality won. So now we arrive at today. Silver is rising. Fast. In 2020, it was $18. By 2024, it hit $32. That's a 78% jump. And it's not slowing down. Some days it spikes $2 in a single session. Traders panic. Shorts get squeezed. And the metal keeps climbing. Reddit's Wall Street Silver community saw this coming. They've been stacking physical silver for years, pulling it off the market, forcing the system to face the shortage. But they're not the cause. They're just accelerating what was already inevitable. The real drivers? Tesla, SunPower, TSMC, Microsoft, Google. The companies building the infrastructure of the future. They're buying silver by the ton. And they're not selling it back. Meanwhile, above-ground stockpiles are shrinking. The comex, the main exchange for silver trading in the US, has seen its registered inventory drop dramatically. In 2021, there were over 150 million ounces available for delivery. By early 2024, under 50 million. And it's not just the comex. The Shanghai Futures Exchange, the London Bullion Market, they're all seeing the same thing. Less silver. More demand. Tighter markets. Premiums are spiking. The difference between paper price and physical price is widening. You used to be able to buy a silver coin for $2 over spot. Now, it's $5, sometimes $8. That's not speculation. That's scarcity. So where does this go? If industrial demand keeps growing and mining production stays flat, we're headed for a structural deficit. Meaning every year, the world will use more silver than it produces. And that gap will have to be filled by reserves, scrap, and recycling. But reserves aren't bottomless. At current consumption rates, some analysts estimate we could see severe shortages by 2030. Not price squeezes, actual shortages. As in, industries can't get the metal they need to build solar panels or EVs. And when that happens, prices don't just go up. They explode. Some forecasts put silver at $50 by 2025. Others say $100 by 2030. The most aggressive models, the ones accounting for a true supply crisis, suggest $200 or higher. Not because of hype, because of necessity. Governments are starting to notice. China's been stockpiling silver quietly for years. India's buying. Even central banks, traditionally focused on gold, are beginning to diversify into silver. And then there's the green energy push. The US wants to double solar capacity by 2030. Europe's going carbon neutral. China's building entire cities powered by renewables. Every single one of those projects needs silver. If you're building the energy transition, you're buying silver. There's no substitute. Copper doesn't conduct as well. Aluminum corrodes. Gold's too expensive. Silver is the only option. Which means silver isn't optional anymore. It's critical. So why isn't this front-page news? Why aren't financial analysts screaming about it? Because it's inconvenient. Admitting there's a silver shortage means admitting the green transition might be harder than promised. It means admitting we don't have enough of a critical material to build the future we keep talking about. It also means admitting that for years, while banks were suppressing prices and regulators looked the other way, we should have been investing in new mines, new production, new supply chains. But we didn't. And now we're playing catch-up in a market that doesn't have any slack left. The financial media loves to talk about bubbles. Meme stocks. Retail traders pumping assets. But silver isn't a bubble. It's a bottleneck. And bottlenecks don't pop. They strangle. If this made sense, subscribe. We'll keep it simple. Silver is rising. Not because of Reddit. Not because of manipulation. Not because of fear or greed or some grand conspiracy. It's rising because the world needs it. Desperately. And we don't have enough. We're building a future that runs on electricity, renewables, and technology. And all of it, every solar panel, every EV, every data center, runs on silver. The demand is real. The supply is finite. And the gap between the two is widening every single day. So yeah, silver's up 40%. And if the fundamentals hold, this is just the beginning. The truth they won't tell you? We're running out. And the market is finally waking up to that fact. The only question left is, what happens when everyone else figures it out too?